All right. Good morning. Good morning. Good morning. Little technical difficulty. Sorry for being a little late. Running a little late today. All right. How's everybody doing? We got a few guys coming in and saying good morning. Hey, there's Matt Baker. First thing, number one, Matt Baker. And we got Lowdown Killer coming in at number 2. We got Bruce coming in at number 3. Michael Bruce coming in at number 4. And Kirk Schwartz saying hello, bringing up the tail. We got a lot more guys out there watching than what are saying hello. So if you want to put up your little marquee, we'll make you famous. All right, guys. We got a fun presentation for you today. Here's how it's going to roll out. We're going to watch the markets open, which is like in what, 1 minute, 27 seconds. 27 seconds they're gonna open up here. So let's pop open the rest of the markets here. That's not the one I wanted. We'll let that one load anyway. Look at it go. Is it going? Not yet. It's getting excited. Let's come in here. Let's go to this one. This one I wanted. And I didn't want it like that. Okay, let's come in here and bring them like this. There we go. All right, in the upper left-hand corner, we have the S&P 500. In the upper right-hand corner, we have the Dow. Bottom right-hand corner, we have the NASDAQ. Bottom left-hand corner, we have the Russell. This is how it's going to play out today. We're going to watch these things bust out of here just for a few minutes, watch them rock and roll. And then we're going to, then what are we going to do? Then we're going to go over and we're going to look at what happened on Friday with our option strategy that we were playing against. And I'm going to explain to you the things that went on then. And then we're going to show you how to hedge with the autopilot. Good idea, right? Hedge with the autopilot. Because last week, there's your little squeeze from your Bollinger Bands right there. Of course, that was pretty obvious, right? So we're going to, last week, learn how you could hedge with the full-size contracts. And the next day, we learned how you could hedge with the mini contracts or the micro mini contracts. So we could go over to a different contract month and trade against the longer contract month. So that was kind of cool and that was fun. But today I'm going to show you how to use the autopilot to hedge against those sold options. All right. And protect yourself in case the market goes haywire. All right, so there's advantages and there's disadvantages, but we're going to go over and we're going to turn those on. I'm going to show you the advantages and disadvantages of having that turned on. That's a pretty cool strategy. So I want to run it for you and show you how you can do that. And then it's kind of a different mindset. You have to kind of think about things a little bit differently, but that's all right. That's the name of the game, right? So you have to think about things just a little bit differently. All right, look at this Russell. This is the range bar 10 up here on the Russell, range bar 6 on the NASDAQ. That might be a little fat. Well, you know what? Range bar 6 is usually way too fast on the NASDAQ in the mornings. This doesn't look too fast right now. It looks a little choppy. Okay, there's the Dow coming into a decision point. You want to take it long? No, take it long just as it went the wrong direction. That's an ABC to the downside, right? Let's try that one. See if that baby won't rock and roll to the downside again. It's a little ABC pattern, and I took it long right there, thinking, okay, ABC this way, and it failed. ABC this way now. If it fails, we're going to, okay, that's it. 2 shots at it. That didn't work. Started to go sideways, whipping us back and forth. What happened? You dumb market. You dumb market. Now is it going to fall on that arrow? Now watch. That's right where we got caught, right in those little green-red switchovers. Then why don't you just wait and trade the arrow? You say that every day. You say that every day. Just wait and trade the arrow, Lan. We're going to get an arrow on the Russell. All right. Try your arrow idea. Just trade the arrow, Lan. Okay. Oh, that worked out real well. Would have worked out up there. Well, sometimes it works, sometimes it doesn't. It's funny, I was cruising through, hey, good morning, Jay. It's good to see you. I was cruising through the Facebook yesterday, and there was somebody selling a book, and it looked like to me they had, oh my gosh, look at the Dow. Ah, that's called FOMO right there. That's making you feel sick. That's a sick feeling right there. Oh my gosh. Shake my head. I'm sure one of you guys caught that, and you're looking at me going, Lan, give me the mouse. Give me the mouse. Ugh. Okay, there's a good decision point right there on the NASDAQ. What's it going to do? Going to still go higher? Are we going to get a rebound on the Dow? Okay, we try it. Try again. Try. If first it don't succeed, try again. I was cruising through Facebook, and there's somebody who they're trying to sell a book full of candlestick patterns. And I was kind of laughing. Ah, you rotten little dog. Do you think anything's going to move? Lan, you're just whipping back and forth. I know I'm playing the arrows. Didn't you say trade the arrows? We'll give it a minute. We'll see if we can get something out of this thing. What's the news? Oh, look at the Russell. Russell's fallen. We're going to get a continuation on the Dow. Remember, these are range bar 6. They're tiny little moves. Go to the 1 minute chart. That's probably one bar. That's why I like the range bars. It breaks those 1 bars up, so they're not one great big bar. But I was cruising through Facebook. I think I told you that, didn't I? I was cruising through Facebook. Somebody was selling a book of patterns, candlestick patterns. And I'm going to show you what they were selling. The thing is, you can go out on Amazon, you can buy a candlestick book for $20. They'll show you all the candlestick patterns. This guy was selling it for like $200. A course, $200 course on candlestick patterns. I'm like, ugh. Who's going to pay $200 for a candlestick pattern book? But he was selling it on Facebook. I don't know if anybody bought it, but I guess I don't know. But I made a comment on his thing. It probably wasn't very nice of me to do. But candlesticks, there was an article. You know, I like candlesticks. I tell you, they're cute. They look like I'm trying to see if I have candlestick. I have a whole thing on candlesticks. A whole little cheat sheet. I don't think I put it in on our free one that I throw out here. Candlestick patterns are a thing, right? And we don't talk about them a lot in this class, and I'll tell you why. Where is that candlestick? Oh, we don't. I'm sitting here looking through. I'm trying not to cover up our screen. I'm trying not to, but you know our slide presentation thingy that we do here, right? I didn't put candlesticks in there. Oh, where we got popped out. That whole big long run right there didn't make us enough money to cover our losses. Isn't that disgusting? Isn't that terrible? I mean, we didn't even make enough money to win back our tiny little losses. We just jumped in and out a couple times in that big long run we were there. because I didn't double up. I didn't go, oh, we're moving. We got our stop, move to break even. I didn't add in one. I didn't add one. I didn't add one. I didn't take it off. I didn't castle because I was looking for my candlestick book. I'm going to get my candlestick book. Let's watch these things for a second. I'm going to show you a candlestick book, and then I'll give it to you. You can have it. If you can give me just a minute to find it. It's just a story I thought of. I wasn't prepared to give you the book, but if it's here, I'll give it to you. It's on candlesticks. The guy was selling it for $200. I'll give it to you for free. Of course, mine's not his. His might be worth $200. Mine's just only worth free. Playbook. Where is it? Cheat sheet candlesticks. I can't find it while I'm sitting here. I'll have to give it to you. I'll give it to you tomorrow. I'll find it. I'll give it to you tomorrow. Anyway, my story. Let me finish my story. Dow. We're going to take another short here. See if it wants to continue. Nope. You rotten little booger. Reverse land. Now it's going to go up. No, I don't think so. And then it will, and then I'll feel bad. Come on. There we go. Breakout. Come on. Nope. It ain't going to go. It ain't going to go. I'm getting caught in whipsaw again. Okay. So my candlestick story. Keep getting distracted. That's going to go now. Just had to come and stop us out once. Well, there was a rookie mistake. What rookie mistake, Lan? I accidentally went long on the Russell when I meant to go long on the Dow. Come on. Well, we got stopped out again. If the market ain't going to go in the favor you think it's going to go, just get out. You going to keep trying? I think it's going to rebound. I think it's going to go up. Just might not go up right now. Yeah, you're getting hiney handed to you. Yeah, you got to stop. Stop, Lan. Stop it. Stop it. Stop doing that. You know. What's our news? I got to finish my story on my candlestick story while I was telling you. It wasn't just that the guy was charging $200 for a candlestick book that you can buy on Amazon for $20, or you can come here and I'll give it to you for free. Monday, 7:45, 8:30, 7 o'clock. The Fed all spoke this morning. 8:30, Jefferson speaks. Man, these guys they got a lot to say, don't they? They've been speaking, all of them speaking every day. 9:30, 3-month bill. There's nothing. Today's a dead day. Fed Bostic speaks at 5 o'clock p.m. I don't think Jefferson's going to have anything to say that's going to move the market. I don't know. Oh, look. Lan. What about that Russell? Look at the NASDAQ starting to rise. Lan, finish your story on the candlesticks. Okay, the reason I was laughing was because I made a comment on the candlestick story, on the guy's candlestick ad for his $200 candlestick course. I didn't make any comment about his money. I mean, he can charge whatever he wants for it. If you can get somebody to pay him for it, go for it. I mean, I'm just telling you guys, you can go to Amazon and buy an Amazon. One of the best books on candlesticks, right on Amazon for $20. I don't know why you'd pay this guy $200 for his little flip book. on candlestick patterns. But there's a great article published in Stocks and Commodities and Magazine about, I don't know, it's been probably a couple of years now, but look at that. Look at the Dow. Look at the NASDAQ. Look at it go. That ain't gonna go. You rotten little booger. Boy, we are not having any. We can't catch a damn thing today. Got one little trade. Market's just not trending, is it? It looks like it is. I mean, you look at it and you're like, oh, that's great. That's a great little market. But it's not. It's just choppy. But there was a great article published in Pitt News Magazine on candlestick patterns where they'd done a tremendous amount of back testing. I mean, a lot of back testing. And they proved out that candlestick patterns are really good because you have a 50-50 chance on almost all of them except one. That's pretty good odds, right? You do a candlestick pattern, you got a 50-50 chance that it's right. It's the way they publish it in the book, that it's going to go either up or down. But we all know you got about a 33% chance because it could go sideways, which, what the heck? Today, we've had a lot of that. But they said you got basically a 50-50 chance with almost all your candlestick patterns of working out. So what does that mean? Nothing means nothing. It means they're nothing to them. But there is one, and they surmised why there was one that actually worked. And I thought, well, that makes perfect sense. It was the hammer. How many of you know the hammer candlestick pattern? They said the reason the hammer has like a 60-40 is because it's the only one that traders can actually remember. The hammer pattern is the only one everybody can remember. So that's the only one that has just a slight better than 50-50 chance of being right. That's how good candlestick patterns work for you. So that's was something that was published in Stocks and Commodities Magazine, not Pitt News Magazine. It was published in Stocks and Commodities Magazine. But I thought that was hilarious. What is going on with this market? Are we getting back to VWAP so we can put on our option? I'm going to show you how to hedge with the autopilot on our option strategy. We need that thing to come back to VWAP. I'll show you why I want it back to VWAP. Well, you guys all know why we want it back to VWAP. Look at this. It's starting to swing again. This Dow, why is I can't pick the right time? I pick it right here when it's all swinging like this. And then it starts to move like that. Does Lan trade it? No. Why? Well, because you don't pay attention to your stochastics indicator, Lan. And when your stochastic is way down in the bottom, you can buy. When it's way up in the top, you can sell. You didn't do that. You was right through the dead center, and you kept going to go back and forth. I know. Do as I say, not as I do. Okay, pay attention to your stochastics. That's why it's on the screen. If the market's way down in the bottom in the lower region, that's when you can go ahead and you can start trying to take some buy signals. If it's trending right through the dead center between those two lines, between 20 and 80, stop trying to take all your positions. There ain't nothing there for you. Okay, all right. I forgot to look at my stochastics. I was just anxious and excited talking about candlestick patterns. Just randomly being stupid. Stop being stupid, man. Sometimes I'm stupid. Learn from my mistakes. That's the best thing, right? Let somebody else screw up, and then you can learn from how bad they were. I'm a pilot. When somebody crashes, we go look at what they did wrong, so we don't do that mistake. There's one way up in the top. I'd probably been better off to wait and take that one right there, right, Lan? Yeah, that'd probably been better one. Doesn't mean it's perfect, but it's better. Look, that one's working out. Look, all the ones that are stochastics right through the middle. You got your hiney handed. Even MACD was saying to go in, but stochastics was not agreeing. Well, I guess it agreed right here at the bottom. That was pretty crappy. It didn't have much of a rally. It's not perfect, but it's the best thing we got, I guess. Market's got to move. The market's got to move. That's why you have it on there, Lan. That's why you have it turned on. Why don't you use it? Because I was talking. Just being stupid. All right. You know what's cool about track and trade, though, is we got this plugin called the candlestick plugin. Watch this. You want to see candlesticks? Of course, this is I don't use candlesticks, do I? I use Heikin-Ashi bars with candlesticks with Heikin-Ashi bars, range bars with Heikin-Ashi bars. So we're not really using candlestick charts. We'd have to turn off. Let's just let's turn on a 1 minute chart here. Okay, so this would be, and then we have to turn off Heikin-Ashi. All right, this is where you're going to get your candlesticks. All right, this is a chart you'd have to look at. Let's turn off ATR. And we'd turn on chart overlays, candlestick auto recognition. Now, this is where you come in and you say, hey, wait a second, candlestick auto recognition? Well, that's pretty damn cool. I didn't know you had candlestick auto recognition. Well, we do. So you can come in here to your candlesticks, and you got all these candlesticks. See, there's hammer, there's inverted hammer, there's morning star, there's morning evening star, there's a piercing line, engulfing, white soldiers, harem on me, 3 outsides up, 3 downs. We got everything. It's all in there, and you can adjust them how sensitive you want them, how whatever you want. We went through and back tested and put all the defaults in there, and then you got all your neat stuff in here. You can change them colors. You can put buy sell arrows on them. You can take the buy sell arrows off. You can have it trade automatically on the autopilot. You can reverse your formulas in case you think they're backwards. You can do one for buy for every sale. You can do all kinds of neat stuff with the autopilot or with the candlestick auto recognition. And you can buy this plugin into the software for less money than you could buy that guy's course. Trend moving averages. You can see your trend of the candlesticks. You got all kinds of really neat stuff. So it'll come in here and turn on all your candlesticks for you. So there you go. You want to do candlesticks? There's candlesticks. Here I am covering my dumb self up again. All right. So that's your candlestick auto recognition tool. If you guys are really into candlesticks, if you went and paid that guy $200 for his course so you could learn what a candlestick, what a hammer is, or what a harami is, then now you know, because you paid him $200 so he could teach you what a harami is. But if you come over to track and trade, now you can turn those on and it'll pop them up on the screen. So you can have them abbreviated or not. See, EDS, this is an MDS, this is an EDS, an MDS. Well, turn off those abbreviations. They tell you, oh, that's an evening doji star. Oh, that's a morning doji star. Oh, there's another evening doji star. Let's turn on one buy for every sell. There you go. Morning doji star. Lots of morning doji stars. Morning. It's a morning. Must be a morning. Good morning. There's an evening doji star. All right. There's an evening doji star. There's an engulfing pattern. There's a morning doji star. There's an evening doji, evening doji. Lots of evening doji stars. All right. Where's the pattern that told me to buy that big long uptrend right there? Where's my candlestick that would have made me rich beyond my wildest dreams? Huh. Well, they're all on. I don't know. 15-minute chart. Let's turn on our candlesticks. $200 candlestick book. You can get it on Facebook right now. Candles. Oh, I didn't set those. Let's turn them all back on again. Oh, Lan, you got to turn off your Heikin-Ashi. Got to turn off your. Oh, this is a 15-minute chart. Okay. There we go. We're back. Let's turn off the abbreviation so we can see morning stars, engulfing, evening star, evening doji star, morning star. Man alive, there's a lot of those. Evening doji star. Let's turn off the doji stars. There's too many of those. Harami outside. Where are the doji stars? Shooting stars. Is that them? No. Evening. Oh, morning. There we go. Yeah. I guess there's not as many. What's morning, evening? Oh, there they are. There's the little buggers that are coming on all the time. Too many stars. Yeah, those engulfings are pretty big too. All right. So maybe we turn our stars back on. Get rid of that engulfing. I guess that's about all there is. Anyway, there you go. You want to know about all your candlestick patterns? There they are. Now you can be rich, rich, rich beyond your wildest dreams because you can trade the candlestick patterns. And I'll give you my candlestick pattern thing for free tomorrow. So come back tomorrow and I'll make sure I find it in my library of cheat sheets and I'll give it to you. You don't need to go pay that guy too. Well, of course, I don't know what's in there. He might have some magic stuff that I don't have. Something for worth $200. All right. Oh my goodness, look at that Dow. Went all the way back up to the VWAP. Well, now we're at the VWAP. Let's go put on our options. Let's see if we're at the VWAP on VWAP. No, it's clear down here. Oh, we passed it. Lan was talking about candlesticks. What's got the arrows? Oh, VWAP. Okay, because we got the VWAP turned on. I changed the color, made it magenta. It's a little far away. Let's wait for a minute. I want it to come back. I want to come back here. It will. You know it will. It'll come up. It'll come back. Just give it a minute. We can't put on our option strategy till right here. So just wait for a minute. We'll watch the other markets, see if we can't. That's a 1 minute chart. I'm going to put that on. I don't want 1 minute. I want 2 minute. There we go. That's our 15 minute. I'll get rid of that for now. Let's just give it a minute. See if it'll come back. Lan, look at your stochastics. It's getting way up there in the high pot. You want to take a short position? I don't know. This market's running like crazy. Bruce says he tried trading the candlesticks with the autopilot. Yeah, it's not really. I mean, you can. Candlesticks, just trading random patterns. Not so good, is it, Bruce? Let's see. Come on. We need the S&P to come back for us so that we can put on our neutral option strategy. We're getting way up there in the upper region. What's happening down here? Look at stochastics. It's way down here. It's trying to curl and go up again. Is it going to rally one more time? Look at how sideways it is. I don't trust it. Take the breakout, Lan, of the sideways channel. Which one? That's where we got our heinies handed to us last time. Kept trying to take a breakout of the sideways channel. There's your little squeeze on your Bollinger Band. How we got that set? I think we set that at a 2 standard deviation, didn't we? Okay, bouncing off the 100. He's going to break the 100 and come back down. We got to have it come down for our option strategy on the 2 minute chart up here. We're waiting for that to come back. We need it to come back. Come back down here. Then we can put on our option strategy, and I'm going to show you how to hedge with the autopilot. You're going to try and do some more day trading, Lan? You're going to get your heiny handed to us? Again. Look, there's our signal with the stochastics in the lower region. Maybe we should have taken that one. Just trade the arrow, Lan. Trade the arrows with the stochastics in the bottom region. Trade the arrow with the stochastics in the top region. Look, it wasn't in the top region. That arrow would have made you a little bit of money. No, it wouldn't have. Not really. Well, maybe a little bit. There it goes. There's a little pullback, a little flaggity flag. Do you trust it? No. Not after being down $300. I don't trust anything. Well, you should have, because it just took off like a rocket ship. Ow! Don't tell me that. There was this person that taught me how to read candlesticks without knowing and using any patterns. Well, I don't know how that would have worked out. I don't know how that would have worked out. How'd it work out for you, Michael Bruce? Ross uses candlesticks quite aggressively, I notice. Listen to him talk. He likes to see his good candlestick patterns. I notice that he usually uses them to help him get out of the market as opposed to get in, but he's a pump and dump trader. He loves to trade the pump and dumps. I'm not good at pump and dumps. I don't really like to trade pump and dump stocks. There's a group of those guys that like to do that. Trade the penny stocks, trade the pump and dumps, and getting all that stuff. That's wild man territory to me. I just can't do that kind of stuff. Of course, been having a hard time trading this stuff here too, haven't we? I mean, it's all hard. It's not easy. None of it's easy. But that stuff Ross does is really hard, in my opinion. It's the hardest kind of trading there is. All right. What about this one here? You want to take one short on the Russell? Not sure the first one's going to go. Yeah, that's kind of the name of the game with any pattern, right? Right, Michael Bruce? Oh, they worked really good if the market was trending. Yeah, it's true. Probably true. Oh, look, the NASDAQ's starting to rally and the Dow's falling. That's not generally good. We don't want to see those going. Oh, look, here it goes. It's falling too. Let's take a little short position off of this thing. Let's see if it wants to go. Yeah, or at least a break even on the Dow. Okay, it's going to break get stopped out on the NASDAQ. Okay, here comes the S&P's coming back down. You gonna break that 100-period moving average and keep going? Come on, 100-period moving average. Come on, Dow. Looks like for about ready to turn around and come back up because we got our stop to break even. So that trend will probably be over right about now. And that way it works. What you thinking on the Russell? Stochastics is way up in the top. MACD's rolling over the top. It looks like it wants to break and fall. Yeah, that's about all it's going to give us out of the Dow. It's going to stop us out right now. Why didn't you trade 15 contracts, Lan, like that other guy? Well, if I'd have traded 15 contracts, we'd be down $2,000, not 200. So there is that. Well, I don't know if we're going to get this thing to come down down for us all the way back to the VWAP right now. I'm just going to put on my option order right now. Look, Russell's getting a little ABC pattern in there. Do you think it's going to break higher above that thing and continue to go? I'm going to say no, and then I'll be mad because it will. They're one good trade away. You're always just one good trade away. Is the Dow going to rally on this thing? It's in the down arrow. Should be a little green pullback, and then it should fall again. Or it could just go sideways. Stochastics way down in the bottom region. Trying to curl. Is it going to curl up or down? 33% chance. One way or the other. Drop in on the yellow dot. See if it wants to go. There it goes. There it goes. It's a micro mini, though. I only got one micro mini. It's all right. It's not about making big money. No, it's just about trying to do it right. Catch a winner. Catch a market that's moving. There it goes. There it goes. You gonna castle, Lan? Yeah, let's. Oh, it's gonna back off. There we go. Castle. Well, that didn't help. Caught a little bit of a run there, didn't we? That was a good little run. If that had been in a mini instead of a macro mini, we'd certainly been back to break even. Come on, Russell. It's all on your shoulders now. I thought you were going to go put on your options order, Lan. Well, I got distracted. Need to write a book. Distracted Trading. Oh, wait a second. Aiden Gray already wrote an article about that in Pit News Magazine. Did you guys get the Pit News Magazine last issue? Michael Bruce. You like my accumulating wealth one tick at a time? I actually got that. Oh my gosh, look at the NASDAQ. Turned right around and rallied like a wild dog. I got that trademarked. Accumulating wealth one tick at a time. That's my trademark. I actually filed it with the federal government. It's a federal government trademark. That little saying. Nobody else can use it. I got it. I thought of it. Well, the NASDAQ's starting to move. That's not our news event, is it? Our Fed Jefferson's not speaking till 8:30 my time. So why is that thing starting to move? We're going to look at that Russell. It's up there. It's making $50, but it's going to come back down now. It's like it's run out of juice. Come on, you stupid thing. Go. Are you just going to go to break even, Lan? Because you don't want it to take any money away? Yeah, why not? I'm sick of losing money. Let's just put this thing at break even. It looks too dead to keep going. Because then it'll come back and stop you out and then take off like a rocket ship. That's what'll happen if you put it at break even too soon. I know, but I just don't trust it anyway. I have no trust. I have trust issues. What's your settings? What are your settings, Lan? My settings are 0.8. 1 and 0.8. It's barely moving enough to get stop to break even with 0.8. Come on, little doggy. Come on, Mr. Russell. ABC, Lan, ABC. ABC. How high is it going to go? Well, if you measure Fibonacci, we're going to put Fibonacci right there. Line it up. Line it up. We just broke 61.8. There's 100 right there. If we got any strength, 130.9 is right there. But this is a long butterfly, not butterfly. Fibonacci bow tie. Here's a bow tie, right? There's one bow tie. Here's another bow tie. Little one right here. Little bow tie, right? So probably go up. How high is it going to go? Well, what's your Fibonacci projection say? Probably go up the same distance from here to here as from there to there. So if we say, well, it went from here to here where it broke across $135, it'd probably go up another $135. We're right there right now. Probably take that profit off at 155. That's probably all we'll get. If this pattern stays the same, the volatility scale. But this one went farther. That one went 275. Right now, this one's from here to here. Come on, draw a new one. From here to here, we're at 300. That one was 275. So we're actually about where that thing's probably going to top out. Take it off and always put it back on if it comes back down. So that's the same distance. It doesn't look it, does it? That's the same distance. 275. I guess from that red bottom to that top is a little farther. That first one was about 385. So 385 would have been up to there. Could still go. Could still go up to there. But I took it off as it pulled back. Sucked my stop in too tight. Now watch it go. Keep going. But I felt like it was starting to top out up there. So here's our Fibonacci bow tie right there. So when it comes down, we expect it to come down into this zone here, right? And if it's going to continue, we'll expect it to come down in here and then turn and go back up. Doesn't mean it can't just keep on going up this trend, because the first one was this big, from here to here, here to here. That's the Fibonacci bow tie zone, right? Buy zone. This is your buy zone. That's what I call it. The buy zone. Where'd you get that from, Lan? Who told you that? It's in my cheat sheet. It's in the cheat sheet, guys. It's right here. You guys all have this cheat sheet. I'm new here. How do you get that cheat sheet? Well, if I could find it. Where's that pattern? This is the Fibonacci bow tie pattern. It's in here. There it is. Nope, that's not it. Is that it? No. Here. I know I got it in here. Where's the buy zone? Well, it's in your cheat sheet somewhere. The Fibonacci buy zone. I thought it was in there. I'll have to look and see. Pretty sure it's in there. I know I drew it in there. This might just be the old version. Huh. Oh, there it is. It's there. You guys are all like, it's there, Lan. It's there. Identifying the Fibonacci bow tie buy sell zone right there. So the market comes down, rallies up, pulls back into the buy zone. This is where you get your Fibonacci bow tie. And then in this buy zone, that's where you buy and look for the next leg up. This is a Fibonacci sell zone. Comes down, comes back up, tests the previous low. And this one tests the previous high. Once it breaks previous low, that's where we look for it to turn and go back up. So that's the sell zone on this side. This is the buy zone on this side. All right. So good thing we took our money when we did on that one, right? It's starting to come back around. What's our S&P doing? Has it come back down? Can we put on our option strategy yet? Michael Bruce, you've been watching the S&P for us? It's stuck up there, isn't it? Hasn't come back down to the VWAP. Making a little ABC top formation. ABC. Is it going to drop and come on down? If it is, we should take a short position anyway, right? Ride it all the way back down to the VWAP. It's a big risk. That's a 2-minute chart. What does a range bar chart look like? With Heikin-Ashi. There's our 1, 2, 3 top formation. How come VWAP's not on? There's VWAP. Come on, we want you down here. For this strategy, we need it at VWAP because we're going to hedge at VWAP. We're going to hedge the VWAP with the autopilot. So if it doesn't come back to VWAP, we're going to have to make an adjustment on our strategy. I was going to show you the adjustment tomorrow. I was going to show you how to do it with the magic stick, but I was going to do that tomorrow. Tomorrow is the magic stick. Today we may do the magic stick. We may do the magic stick today, and we'll do the autopilot VWAP tomorrow because I can't get it to come back to VWAP. Oh, it did. Look right here. Where were we when it was down in here? We could have done that one. Doggone it. Doggone it. What were we doing? When was that? Oh, that was right at the opening bell. Come on. Give us something here. Got to have the market cooperate with our strategy or else we can't put our strategy on. Can't teach you how to, I could teach you how to do it wrong. Like we do that a lot in this class, right? We just teach you and then tell you, hey, don't do it like I just did it. Do it when it's set up properly. But I kind of wanted to have it set up properly today because it's got to really be set up properly to show you. Now it's going up there and testing that high. Magic stick is tomorrow, guys. Come on back and we're going to watch the magic stick. Hey, Michael Bruce, and he's having good luck with the wild eye, crazy eye, iron butterfly. Better than sliced bread. I know I overuse that state. I got to come up with something better. Got to come up with something better. Guys make fun of me. Rich, 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 beyond your wildest dreams. They make fun of me for saying that one too. Better than sliced bread. I grew up with that. You guys probably, a lot of you guys are from Utah. I know, because you're from the university. You're my university students. So I know you grew up saying those things too. Probably grew up eating white gravy on bread with red beets, right? Tell me it's not true. Some of you guys grew up eating white gravy over bread for breakfast with red beets. Tell me that wasn't some breakfast you guys had. Something my mom made for us when I was a little boy. Let's put some carbohydrates on top of some carbohydrates. Feed that to our kids. Send them off to school. That thing's just dead, isn't it? Just sitting there. Look at that. It's coming up trying to break that high. Can't decide if it wants to do it. Look at that thing. It's just been sitting there for the whole gravy story. Michael, have you put on your WEC EIB yet? Are you still waiting for it to come back to VWAP like I am? I really want it to come back to VWAP so I can show you the hedging strategy with the autopilot. Market's not playing nice. Yeah, we didn't get our ABC, did we? It's going the wrong direction. If we'd have put it on right at the opening bell, we could have done it right here. But who wants to do that? Man, look at that baby go. We're breaking the all-time high. They're going to be running around like chickens with their heads cut off over at MSNBC. So excited they're going to pee themselves. Stock market broke all-time new highs. Well, there it is. Broke it last week. It didn't hold above it. Closed below it. Now they're going to see if it'll close above it. They're going to get so excited they're going to pee their pants over there at MSNBC. Well, let's see how our investments are doing. That's lackluster. Come on. Should we put on our? I could put it on, but it's not gonna. We can't hedge it till it's back at the. We can't autopilot hedge it until it comes back to the VWAP. So if it's just gonna stay up there, you're gonna have to wait until it comes back to the VWAP to turn on the autopilot hedge. Let me show you how to do it anyway. All right, let's pretend. We got to learn. Oh crap! I don't want to teach you on a bad example. Because we know it's going to fall here in the next probably 30 minutes. It'll be back down here. It's going to break this high and it'll turn around. It'll come back down to the VWAP. And it'll probably swing past the VWAP. And it'll probably be clear down here in the next What? How long did that take? How long did it take it to get up there? It'd probably get back down here. Probably it'd be pretty slow. I doubt it'll fall very fast. Might just flush like a toilet, but I doubt it. It'll probably just turn around and wobble back down. It'll be down to the VWAP here soon. Notice the VWAP kind of follows it too. I mean, the VWAP's not just in the afternoon, the VWAP just goes sideways. But in the morning, the VWAP moves a little bit. You'll notice it comes and it kind of trails up after the market. So the market, when it comes down, it doesn't have to come all the way back down to the opening bell VWAP down here, because the VWAP is just a moving average, right? So it'll trail up just like the other moving averages. But in the afternoon, because it's volume weighted, it starts to go flat. Whereas the other moving averages will keep moving. Volume's starting to fall way off. There's no news today, so it's actually a very good day to put on our wild eye, crazy eye, Michael Bruce. So we just need to get it back to the VWAP to do it. Here we're getting a red bar. Well, let's go day trade some more. Oh my gosh! Look, Lan's got a down arrow right there on that little decision point, and it turned and went the other way. 33, 33, 33. Look at that. Man, that's beautiful. Where were you? You're watching the S&P. Why aren't you trading this one now? Am I chasing it? I feel like I'm chasing it at this point. Besides, the market's up. Up. It's counter trend. Up. Counter trend. Up. Is it going to do that? We're on the back side of the MACD. Look at the MACD. It's way up there. Stochastic's coming down here in the bottom region. Look, it's trying to go long again. You going to wait for an arrow, Lan, or are you going to take the first green bar? I don't know. Let's wait and see what it looks like. Not real excited to go long here. I keep thinking it's going to come back to the VWAP. That's a little stop out right there. What's it going to do? 33, 33, 33, Lan. You got a 33% chance of being right. Is that thing going to start going back up, or is it just going to make a little flag formation and come back down? Or is it just going to pop around sideways? It's been trending nicely. See if it wants to go. See if it wants to fall back to the VWAP. Come on, buddy. Come back to the VWAP for us. Come on, pal. How many of you caught those nice big trends there in the Dow while I was dinking off looking at the S&P? Any of you guys catch any of these runs? Looks so easy in hindsight, doesn't it? Just take the arrows, Lan. Just take the arrows. I know. Just take the arrows. My gosh, that Dow. What a day for that Dow. Till you get in. Till you get in, Lan. Well, we were at 300 down. We're only at 150 now. We got half our money back. So we've caught a couple of good ones anyway while we've been dinking around here. Looks like it wants to go back up again. There's your counter trend. Drive 1, drive 2. There's your sign right there. Take the arrow, Lan, and you know it's going to be an arrow. Why aren't you long? We can give her a shot. That's all you can do. Michael Bruce says he's rich, rich, rich beyond his wildest dreams on the Russell today. Said he caught all of them. All the nice continuations. Sweet. Nice job, man. Wow, look at that. That is just a beautiful market right there. You can't ask for anything better. That is as good as it gets. That's as good as it gets and lands down 149 bucks. That is as good as it gets, and I'm down $149. I'm that guy today. It doesn't get any better than that. That is the most beautiful trend right there you'll ever see. It's trying to go, isn't it? Breaking a new high. There's our test right there. If we can hold above that, keep her up there, buddy. Come on. It's Viagra time. Keep it up there. Keep it up there. Come on. If we can't put on our wild eye, crazy eye, at least we can day trade. Come on, come on, come on. Can't even get our little yellow dots. Not even got to break even yet. And it's already wimping out on us. Don't wimp out on us. 1, 2, 3, 4. There's our 4 green bars. Trying to make a 5th, but it's not going to do it. There's our 4 green bars. Oh, it's 5 green bars. 1, 2, 3, 4, 5. Now it might make a little flag, right? Because that's what it does. Goes up 4 bars. Then we get a lower high. Flags. Comes down, stops everybody out, and then turns and goes back up again. Come on, don't fail us now. Do one of these things. Like did that right there. 1, 2, 3, 4. Stopped everybody out and then took off and went to the moon. Down here, it didn't do that though. Of course, this is where we traded it right there. I traded it right through here. That's where I got my hiney handed to me. Keep her going. Come on, come on, come on. Come on, push it up there. Break a new high and hold above. Hold above, buddy. You can do it. Hold above. Label it. Label it for me, Michael Bruce. C2 is failing. It's going to fail on the C2. Is it going to stop us out on the C2? Come on, turn around. Go up, 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 up and away, Superman. Turn it around, boys. Boys and girls. Lan, you're going to get your video banned. Why? Because you said boys and girls. Oh, no. Come on, come on. Go, go, go. There we go. Break it up. Break it out. There we go. There we go. There's our little C1 right there. Went red on us for a C1. How about that? Our C2. Come on, come on. Come on. Make those pundits at MSNBC dance in their chairs. Come on. Stop just moved. You see that? Track and trade moved our stop. That's not a good sign right there. That pullback bar, not a good sign. C2 looks like it's failing. Come on, come on, come on. This is exciting, right? It's as exciting as NFL football. Come on, push the ball upfield. Come on, you can do it. We're on the Bulls team today. Bulls and the Bears. Come on, Bulls. There we go. Gonna break above that high and hold above it. Went up and touched it. Nope, it's going to flush. It's because guys like Ross just took the profits right there. Touched that line and they said, get out. But we're looking for a longer trend. Come on, we're day traders. We're not scalpers today. Come on, let it go. Let it go. Maybe the scalpers were better off. We're going to get stopped out. This little trend's going to fail on us right here. Come on, don't fail on us. Well, so much for that. Are we going to go into a longer trend here? Longer pattern? Let's get rid of this one. Draw this one out. Now we're going into a wedge formation. Got a flat top and we got a inclining bottom. Usually that's bearish. Usually it flushes out the bottom of a wedge pattern. Doesn't mean it can't go out the top. Certainly can. Doesn't mean it can't just go sideways. Certainly can. That's what it's doing now, right? It's just going sideways. Now we got a flat top up there. That's going to be hard for it to break through. That's a strong area of resistance right there. It's easier to break the bottom pattern. Well, you're not putting on your option strategy that you advertised out front. I know I can't do the autopilot strategy of hedging if it's not trading at the VWAP. It's got to go back to the VWAP so we can turn on the hedge. Plus, I don't want to be putting on a neutral option strategy when the market's trending like this. Right? I mean, sometimes we got to, I do it all the time, right? We put on option strategies just to show you how to do it. But today, we've been showing you how to do it. You know how to do it. I don't want to do it on a day that you already know how to do it. We got new guys coming in, but they don't know how to do it. You're going to have to go back and watch the previous videos to learn how to put on a wild eye, crazy eye, iron butterfly. Michael Bruce says this is the best strategy he's ever seen and can't imagine how great it is. How well it's working for him. All right, we're breaking out. Are we trying to break out the bottom here? Is this going to be our break right there? Trying to break the yellow dots. Stochastics is up here. It's not quite up as high as, it's not above 80, but it's up there. So the downside potential is where we got. Take it, Lan. Take it. Go short. Take it, Lan. Hold on, because sometimes we get a false breakout. It pops down, pops right back up in, and then it goes down like that. Well, if it does that, do that one, but do this one for now. Do this one now. Do this one. It's a small risk, big reward. What if it falls? You're going to feel FOMO. You're going to be mad because you're going to be sitting here yelling at yourself. I know, because that's what I do. You call it and then you don't trade it. I know, because that's what I do. It's too neutral. It's too neutral. Why'd you take it then? Because you were telling me I should at least try and take it. Small risk, large reward. It's feeling pretty dead. Come on, buddy. Yeah, but they know you're going to take that. They're just going to trick you into taking it. And then they're going to come back and stop you out. It's too obvious. It's too obvious. They're going to trick you. They're going to trick you into taking it. And then they're going to come back and stop you out. It's too obvious. Come on. VWAP. VWAP. Can you say VWAP? Okay, at least hit the 50. 50 moving average. Come on. That's the yellow line. Come on, Mini Dow. Okay, we're on the Bears team now. Trying to push it past the line of scrimmage. This is not a long bomb. They're not passing. This is a run up the middle. Don't get very many yardage with a run up the middle. Come on. Come on. Don't come back on us. Don't get pushed back behind the line of scrimmage. Oh, he's pushing it back behind the line of scrimmage. Are we going to get tackled behind the line of scrimmage? Oh. Bring it. Oh, there it is. They pushed us back behind the line of scrimmage. I told you that's what they were going to do. I told you. I told you they were going to do that. You said put it in there anyway. Well, we could put on Michael Bruce. We could put on our Wild Eye, Crazy Eye, Iron Butterfly way up here on the C drive. The problem is that the chances of this thing moving much higher at this point are pretty slim. This is coming into, it's still the C2. I mean, this is still C2 right in here. It just keeps moving, migrating. So we could take the C2 long in anticipation of a break, but I wouldn't take it until it breaks above that high. But if it breaks above the high, then you feel like you're chasing it. You want to kind of get in below. This is still the C2. It just got ugly right in here. There it goes. There's your arrow. Oh, there's an arrow too. We tried to take the down arrow, not the up arrow. Yeah, but you're in the uptrend. You're on the C drive, Lan. I thought the C drive was going to fail. I want the market to get back to the VWAP so bad that I keep wishing for it to get back to the VWAP, thinking it's going to go back to the VWAP. So I can put on my Iron Butterfly. Let's go look at the Dow. Michael Bruce said he. Oh, wait. He said the Russell. Michael Bruce said he caught these trends in the Russell. Russell's cleaner, a lot cleaner, isn't it? Let's get rid of these stupid lines. Russell's a lot cleaner than it's turned out to be a lot cleaner than the Dow, didn't it? There's a continuation right there. So that little break right there, red to green right there, that one took off. Is that the one you caught right there? It's a little dirty in here. That was dirty. Dirty tricks. It's trying to break that high right now. It's coming in here. The Dow already broke that. Ooh, well, that's not good. We got too many S&Ps up. What's this one? The S&P daily. Well, I advertised that I was going to show you something I can't show you. Well, there's the Russell. Came back to the VWAP, didn't it? Not enough to throw a signal, though. Oh, there we go. Oh, that's the NASDAQ. That's the Dow. S&P. Come on, S&P. Well, guess it's not a good day to put on a neutral option strategy. What's that one? Oh, that's the NASDAQ. That's the micro mini. That's the range bar 6. Let's change that to range bar 10. Range bar 10. Well, that doesn't look good at all, does it? I don't like that one. Let's go back to 6. That doesn't even look good. NASDAQ's not playing friendly. Okay, what's happening up here with the Dow? Watching the Dow. The Dow tried to break that high and it failed. So C1 on the bulls and bears, that was a total failure. That turned into a D drive on the bulls and bears. I think that's a D drive. It's getting ugly up in here. There's our X. Look at that. Drive 1, drive 2, drive 3 on the second side. That's a bigger drive back there. See, if we call this A for the smaller drive, just this single drive in here. There's our single drive. So that's our B drive on the longer term time frame. So on the B drive, that's going to be, we relabel these. This would be down here. This would be B1, right? This would be B2. This would be B3. So that means this right here is X3. That's what we've been waiting for. So that's X3 right there. Okay, now it's going to come down to VWAP. Should have turned on the bulls and bears, been a little cleaner, a little clearer to see. Oh, well. It's coming down to the 50-period moving average right now. So we're going to get an ABC continuation. Michael Bruce. Range bar 6. Michael Bruce, what are you saying? Which market? Is that you've been looking range bar 6 on the Russell? Are we going to get a little pullback here, bounce off the 50? Stochastic's dead center. MACD's fallen. I don't know if we can get it to fall all the way back down to the VWAP anytime soon. Soon enough for us to put this on during class. Man, there were some nice runs in there. Beautiful setups right in there. Look at that. Holy cow. Some beautiful runs in there. Should be up $1,000. Why in the heck are you not up $1,000, Lan? I'm that guy today. Most beautiful day, and I'm down. Well, while we're waiting, I can go show you what happened yesterday. Oh, or Friday. I thought I had screenshots for you, and I go look at my screenshots. There's not any. What did I do with them? You think I can remember what happened from Friday to Monday? I can't remember what happened from the last hour to this hour. All right, let's go look at our spreadsheet. Maybe we took some notes. We did right here. Put on a single iron butterfly, 0 days till expiration, added a second about 1 hour in, took both off at a profit of 25%, let the other one, that's good spelling, other one run until power hour and took it off manually. Total $540, good trade. Had a couple places where I added a hedge as the market fell and then rallied. Didn't make any profit on the hedge, but it kept me in the trade and didn't require a liquidation at a loss. Didn't require a liquidation at a loss. Okay, and then we did took a couple positions and traded. We ended up, that's all we ended up, $540. So that was a good iron butterfly on Friday. That's what happened. I don't have any pictures, but we put it on twice, looks like. Put on a single iron butterfly, 0 days till expiration, added a second at about 1 hour in. So that means the first one must have took both off at profit 25%. So I must have not taken the first one off and added the second one. Oh, I did. I retraded it because the market was dead and it was going right through that sideways channel. I added a second one on and then took both of those off just before power and took off manually for $540. Okay, that's what I did. So that's how that turned out. $540 on that one. Where are we now? Down $139. Minus 139. Lands that guy today. Boy, I've had a losing streak on my day trades, haven't I? We had a winning streak. We had a couple bad ones in here. I don't want to have another bad one. I don't want to put it on stupid. Let's try and put it on wise. Well, it's dead right now. It's dying through this little, just kind of hanging out up here now, isn't it? Why do you want it to be a VWAP so bad, Lan? Why don't you just put it on right now? Because I want to hedge it. I wanted to show you how to hedge it, autopilot hedge it. Because remember, when you put on your butterfly, let's bring up when you put on your butterfly, do I have these in here? I did put them in here, didn't I? Because we were looking at them last week. Down here at this options. The options stuff is here at the end. Right here. Because when you put on your butterfly, that's your profit zone. And so what happens if it starts to move up, okay, this is our profit zone right here. So if it starts to move up, it goes into a loss zone. If it goes down, this is our 0 DTE short straddle, because that's really what a butterfly is, right? It's a short straddle with a long strangle. And so you can see right here, the whole idea is that you got your long strangle on, and the vulnerable spot of a long strangle is right here at the money. Well, the vulnerable spot of a short straddle is outside the wings, and the strength is at the money. So if you combine those two and you put them both together, you get the strength of the short straddle at the money covering the weakness of the long strangle. So that's why that works. They go together like a puzzle piece, right? Combining the short 0 DTE straddle with the long 30 DTE strangle, P&L graph reveals a striking overlap in profit and loss zones, fitting the two together like a puzzle piece, showcasing the potential synergy between the two. While the short straddle profit covers the loss zone of the long strangle, combining this approach offers a balanced risk profile with limited loss potential, highlighting the effectiveness of this strategy. That's why Michael Bruce has been saying, hey, this thing's better than sliced bread, because this short strangle, the strength of it is covering the weakness of the long straddle. So you merge them. The problem is this thing starts to move out into this red zone. If you get a really strong red zone, this can't cover the loss out to the wings, all right, on the first day. So that's why it's possible. I mean, I'm not always saying that the hedge is always the best thing to do, but if you don't over hedge, then it can be a good thing. The problem is we have a tendency to over hedge. We start trading. We start going hog wild on it, trying to hedge every single little tiny move. So you have to be careful, and that's why I wanted to have the autopilot do it for us, because the autopilot will only take it if it's above or below the VWAP. And so if we can put it on right at the VWAP, which is where we want to kind of have it at anyway, right? Because the VWAP is our neutral zone of the market. So if the market would come down, and it will, you watch, I will bet my hat. You know I love my hat. I will bet my hat that thing will be back down to the VWAP sometime in the next couple hours. I don't know when, but it'll come back down to that VWAP. That VWAP in the market's going to touch again today. And so when that happens, that's when I want to put on my neutral option strategy, because then I can hedge it. Now, you don't have to hedge it. So, which means if you want to get your option strategy on right now, go ahead, go put it on. But you can't hedge it with the VWAP. You have to figure out a different way, which is why I want to do the magic stick. But I didn't want to do the magic stick today. I want to teach you the magic stick hedging strategy tomorrow. But today might have been maybe a better day. Haven't taught either one yet. All right. Well, it's time for class to end, and I haven't even put anything on. All we did is sit here and dink around watching the market trade and trend, and I didn't catch any of those big moves. What do you want to do, Lan? I want to wait until it comes down to the VWAP. But you're just losing theta right now. You could be making money on your theta trade. I know. That's why I'm feeling like I should put it on. But then I don't have any way to hedge it. You could hedge it with the ATR. I could, but I don't want to do that. Why don't you want to hedge it with the ATR? Because it's too aggressive. Too many arrows. Loosen it up so it's not so aggressive. But then you take too big of risks. The VWAP is really the best way to do it. Can't really hedge with the moving averages either, because you'd need two of them and you'd need a crossover. And the whole point is that you want to see, and they chase the market a little bit too fast. You could do it with the 200, but then it's not back here to the 200 either. We couldn't do the 200. You need a 200 and like a 201 or something to try and get a crossover, because you got to get a crossover to get an arrow off of the moving averages. The VWAP will give you arrows. The VWAP will give you arrows. All the market has to do is cross over the VWAP and it'll give you an arrow. That's what we're trying to hedge. So you come in here to the VWAP, watch this. We'll turn on the display the arrows and see that. So it's going to buy right there. It's going to sell right there. It's going to buy right there. So it's going to automatically put on a hedge for you. And so right now, technically speaking, had we put on our neutral option strategy, right here, our long put or our short put would be making money, and our short call, or was it the other way around? If you buy it would be our short call would be making money, and our short put would be losing money. But our hedge would be covering the losses of the short put, short call. Am I getting them reversed? If you buy a call, you want the market to go up. If you sell a call, you want the market to go down. So our short, yes, it would be our short call. It would be losing money. So our short call would be losing money, but our hedge would be making money. See, so it would be covering our short call with our hedge at the VWAP. That's the whole idea. And then you come into the autopilot and you just turn it on and you say, every time it crosses the VWAP, put my hedge the other direction. And then you're constantly hedged, either strong or either bullish or bearish against your long strangle. And well, it'd be either one. It'd be not your long strangle, it'd be against your short straddle. See that? And it'll do it automatically. You don't have to sit here and tend it, and you have a tendency to overtrade it. And you're not really trying to make money with it. So that's where I was saying that your mindset can be different. This is a strategy that you can just trade. You can just come in here and say, okay, if it's above the VWAP, I'm going to be long. If it's below the VWAP, I'm going to be short. And you just let it run till the end of the day. You don't care. It's, eventually you'll take the thing off. It'll either be down here, it'll be up there, and it crosses. Anytime it crosses the VWAP, you're going to take that direction. You're going to reverse your position. If it sits there and whipsaws back and forth across the VWAP, that's where you get your hiney handed to you. But that's where, see, if it just sits there and does that, then each time it goes above, it's going to buy, and it's going to sell, and it's going to buy, and it's going to sell, it's going to buy, and you're going to get your hiney handed to you. But if you got your options that you're sold, and you got $1,000 worth of premium coming into you got kind of $1,000 buffer to cover some of those losses if it whipsaws across back and forth across that VWAP. But if the market runs like this, when it crossed, that would have been a good place for us to put our option strategy on. Our long put would be losing money, or our long call would be losing, our short call would be losing money, but our VWAP strategy would be making money. See, we'd be up right now somewhere around $300 on our hedge, but we'd be down somewhere like 150, a couple $100 on our long put, or on our short, on our short call. So that's how that would work. And it just does it automatically, because you can just set that up to do that in the autopilot. You just come in here, you say VWAP hedge. Of course, you have to set this up. I made that. That's not in the autopilot by itself. So I named it VWAP hedge. You come in VWAP, quantity 1, depending on how many options you have. We're just dealing with 1 right now. And then you just market order into it. You don't have anything else on. Everything else is turned off. The whole thing, no stops, no nothing. It's just exit on primary signal. That's the whole strategy right there. We just can't put it on until it gets back to the VWAP, because it wouldn't hedge. I mean, it would, I guess it would, but you'd have your hedge way up here. You want to have it hedging at the same spot as your entry. That's why you want to have your entry at the VWAP. And if it's not, you can come in here with the magic stick, which is what I wanted to show you tomorrow. The magic stick. Oh, this is a range bar. We'll be doing it with the we'll be doing it with this market anyway. You come in with a magic stick, and you can draw a magic stick across there. And I know we've talked about the magic stick in times past. We don't talk about it a lot. Come on. So now you could hedge it right there with the magic stick, because the magic stick will do the same thing. It'll sit there and hedge back and forth at any price, at any level. You just draw it in there, and it'll start buying and selling. Anytime it goes above, it'll buy. See that? Auto continuous, buy when goes above, sell when going below. Max number of trades, 99. Problem with that, it'll sit there and bounce back and forth, and you get your hiney handed to you there too. If it goes back and forth, back and forth, back and forth across that thing. Sometimes we'll turn on the volume by price. Oh, they're all black. How did that happen? You turn on the volume by price, and you just want to make sure you don't put it where there's lots of long green bars, number of bars. Let's increase those. $40 bars. See right there? That's where there's lots of dead space. See that? thing right there. So you don't want to put your hedge magic stick where there's a big long green bar like that, because that's where you're going to get your hiney handed to you. So you kind of want to put it somewhere where there's a dead space right here. Whoa, wow, where's that? Right at the VWAP. Ugh. You don't want your magic stick hedge to be right where the market's going to go whipping back and forth across it, because then it's going to go buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, and then you lose all your money. There's advantages and disadvantages. Always an advantage and always a disadvantage. What are you talking about, Lan? I don't even understand what you're talking about. This is a hedging line. You can use it for a lot of different purposes. We call it the magic stick. But you can set that up so that every time it crosses below it, it'll get you in short. Every time it crosses above it, it'll get you in long. So it'll just kind of go back and forth. It's a hedging stick. But you can also use it just to, single execution. You can say longs only, shorts only. You can come down here. You can put stops on it. You can do all kinds of neat stuff. We're working on a second panel over here on this side. You can even get the thing to trail if you want to. You can have it trail. So it'll get you in, and then it'll start to trail and reverse and go the other way. It's kind of a neat little tool, but it's in beta right now. If you want it, you can go get it. It's not free, but you can get it. But it's in beta. There's no documentation for it. You just have to call the boys over at the office and say, I want the magic stick. They'll give it to you. And they'll tell you, it's in beta. We don't even know if it works. Works pretty good, but we haven't even got any documentation on it. You just have to sit there and try and figure it out. Programmers haven't written the manual for it yet. So it's not really released to the public. It's just kind of a quiet little tool we hide away. And every time Lan plays with it on YouTube, half a dozen people call him on the phone and say, I want it. And they're like, Lan, stop playing with it. It's not ready for prime time. Well, give it to them anyway. They know what a beta is. Okay. Let them have it. More people playing with the beta, the better anyway, I guess. You can put it wherever you want. It's a cool little tool. If it breaks below, it'll put you in. Just draw a line in the screen. It doesn't even have to be horizontal. You can come in here. You can turn off this, and then you can draw it on an angle. Now, if it crosses the angle, it'll take you a position too. So you can draw it on an angle trend line. Now, when it crosses above, it automatically puts you into the market. You just right-click on it. Boom. Activate line, single execution, just like that. There you go. Now it'll buy next time it goes up based on what you get. Single execution buy. That's the one that's selected. Now, if it breaks above that, it'll get you in. You can come in here and say deactivate. And then you come in here and you say auto continuous buy when going above, selling when going below. Then you put on there, and as long as it's above or below that line, it'll put you in long above it, or it'll put you in short below it. That's why we call it the magic stick. Of course, you have to activate it. So hit activate. There you go. Pretty cool, huh? So I was going to show you that tomorrow when we put on a wild eye, crazy eye, iron butterfly, and I was going to hedge it with the magic stick. But today I was going to hedge it with the autopilot. So I guess I taught you both of them. How to do it with the autopilot, how to do it with the magic stick, but we didn't do it with either one because the market won't do either one. Well, I guess it would do the magic stick. Wasn't a very good lesson today, was it? It'd be hard to hedge with the moving averages, Michael Bruce. We're coming down. It's trying to get down here. It's trying to get back to the VWAP. But you know what we could do? We could put one on now, and if it gets back to the VWAP, we put on a second one. We could do that. It's kind of dollar cost averaging in when it gets down to where we want it to be. But by the time it gets down here, it's moving so slow. We might have some profit build up in there by then. Of course, we don't have to do both sides, right? We don't have to do both sides. We could do the single side. Where's my single side slide? It must be in the Pit News Magazine. I'm writing an article for Pit News Magazine in the June issue of this. Maybe I... Yep, it's in Pit News Magazine. Okay, well, you guys all know that Pit News Magazine is coming out. We're going to drop the June issue. The June issue of Pit News Magazine. And it's going to have all these charts in here from all of these different stuff we've been doing in this class on the Wild Eye Crazy Eye. I've got all the stuff is documented. I've got all the charts. I've done the long side, the short side, and then the both sides, and they're all compared in Pit News Magazine. So if you want all that, go pick up Pit News Magazine. It's only $1 for 3 months. 3 issues for $1. Not $1 an issue. It's 3 issues for $1. You can get all 3 issues, and if you don't like it, cancel. But otherwise, it's $49.95 a year after that. And you can listen to all the articles, you can read all the articles, you can watch videos on the articles. It's all going to be documented in there. All the stuff that we do in these classes is where we document it. And Pit News Magazine, go get a copy. You're going to love it. You're going to love it. That's where all these images are that I've been thinking I had in our cheat sheet, but they're not. They're over in Pit News Magazine. Oh, no, here. I do have it right there. I found it. It's not in the same spot. They're also in Pit News Magazine. Look, that. There. We could just put on one side. See, we can put on one side, we can put on the other side, or we can put on both sides. I've been waiting to put on both sides. Since the market's not coming back to VWAP, we don't have to put on both sides. We could just put on one side, right? We could just put on a short call option or a long call option. We just put on one side of our strategy. We don't have to do that. We can't really hedge it. I guess you could. You could hedge it just to one side with the magic stick because it'll just do shorts. So it'll autopilot. We can just do shorts. So let's come in here. How would you make money with a single side? Well, we'd put on just one side. So we come into the options and we go 0 days till expiration. It's not coming back to the VWAP, so I'm just going to do one side. Which side? You want to do the long side or the short side? You have to pick with this one. You have to be right. You have to say, well, it's going to go up or, well, it's going to go down. That's why both sides are good because you don't know whether it's going to go up or down. And then you hedge the wrong side if you're wrong. That's why I was going to do it that way. So we could do a chicken wing. Right, Michael Bruce? So if you think the market's just going to go neutral. Well, you think it's going to fall. If we think it's going to fall, we would do the call side. So we're going to do calls. So we'd come in here and we would go to a 0 days till expiration. And we would, you have to be right. Going to sell a call. You could do right at the money, but then it'd have to fall immediately. Not immediately. You'd have a buffer of $277 minus your insurance policy. Anything below what? About right there. Anything below there, you're going to make a profit. So that's your profit zone. Anything below here, you're going to make a profit. If you sell that right there. Now, if you move it up here, let's say you move it up here. Now it's 155. So now your profit zone goes up to here, 155, about right there. So you gain a little bit, but you lose some of your profit. So that's close I can get it. So now, if you sold that one, it would have to stay below there. The market would have to stay below this line here. Okay. But if you push it out one more, boom, you only get to collect $77. So you take your $77, you go up $77. It's barely right there. Draw your line. Now the market has to stay below that line to collect your $77. You're like, well, Lan, it's more likely to stay below that line than it is one down here. It might go up above that line. It's true, but you don't make as much money. Well, then do more of them. Oh, that's a cool idea. I could just do 3 of these. There's 10 of them. I could do 10 of them. Then I would make $800. That's true. But you have a $123,000 margin requirement. Oh, well, how do you solve that problem? Well, then you have to come in and you have to put on 10 calls. You have to buy 10 calls. What? I have to buy 10 calls? Yeah, you have to protect your short 10 calls, but you can come way out here and buy 10 of these. So you buy them. See, way out there. And then you put in 10 like that. Now your margin went all the way down to 13,000. 13,000, that's still way too much. Okay, we'll bring it closer. Get some better insurance. Now it went down to 7,000. That's still a lot of money. Bring it closer. That's $5,000 margin requirement with a received $600. All the market has to do now is stay below that red line right there until expiration, till all the way out here to that purple line. As long as it stays below, let's get rid of all these drawing tools. Boom. As long as it stays below that red line, hits this purple line, below that red line, you get to keep $600. You want to do that? That's cool. What's my goal for the day? $500. Well, then I don't need to do 10 of them. Yeah, but you lost $139 in day trading today. Oh, so to get to my $500, I'd have to do this. $5,000 margin, $600. All the market has to do is stay below that red line. Yep. Do you think it's going to do it? I don't know. I'm scared. There you go. If you think it's going to stay below that red line, all you have to do is hit that button right there. If you hit that button right there and it hits that purple line before and it's below that red line, you get to keep all $600 for the day. Do you want to do it? I'm scared. What if it doesn't do it? Well, then you could roll it. You could roll the whole thing up. And then it would have a new target that it would have to stay below. Oh. Okay, you just did it. Wow, you're the man. All right, guys, we'll see if our chicken wing pays off. I'll let you know. See you guys tomorrow. That's all I got for you. Overstayed my welcome and didn't do a damn thing, but lost a little bit of money day trading today. But at least we got a chicken wing on there. No hedge. Maybe we'll try again tomorrow for the hedge. All right. We'll see you tomorrow, guys. Take care.